So Dow's down 110 to start. Let's get to Bob Pisani, who is in Miami Beach at that exchange ETF conference. Hey, Bob.
Another beautiful day down here, Carl. 2,000 RIAs gathered to try to figure out the state of the economy and the state of the stock market. And there is an awful lot of confusion down here, I can tell you that. Look at the markets here at the open. It's the third down day in a row for the S&P 500. 2-to-1 declining to advancing stocks, but some of the risk-on stuff is doing a little better. Metals and mining, energy, semiconductors are strong. Staples are still having a really tough time. Procter, Johnson & Johnson, just a really tough start to the year. But overall, it's a very confusing time. Talking to the registered investment advisors here, who are the attendees at this conference, they're having a hard time trying to figure out a few things here. They want a consistent story to tell their clients, and they don't have one. So there's a lot of confusion on the economy and a confusion on the rally in 2023. This is the kind of documents they're passing around. They're amazed at the rebound in the stuff that got really beaten up. Small caps are having a great start to the year. Most of these people are underinvested in small caps. Growth, underinvested. That's having a great start. International, underinvested. Great start to the year. Even the bond market has been rallying modestly with U.S. bonds. That's AGG up about 3%. Meantime, the other big topic here is how much more is left of the tech rally. Again, many of these investment advisors underinvested in technology. They're handing around the stock charts down here with Tesla, NVIDIA, AMD, Netflix up 23%. Even Amazon is rallying this year with a disastrous last year, up more than 20%. Micron, Apple's up 17%. Netflix is up strong here as well. So you see the story here. They're basically underinvested in the stuff that's been rallying in the last 6 weeks, and they want to figure out what to tell their investors. Do they need to get back in? They're not sure quite how to explain the tech rally. A lot of them currently believe that the main reason for the tech rally is because of the after effect of tax loss selling, not necessarily a fundamental rebound. So a lot of people trying to explain away the tech rally here. The big issue is here, what's going to happen with the market? Well, can we reverse this rally? What would reverse it? So everybody here agrees if we get any evidence of inflation reaccelerating or any downturn more significant than anybody's expecting is fine. But one thing everybody agrees on here right now is that strong jobs report is no reason at all to sell off the stock market. They love it because it's easier to support the soft landing story. That's an easier sell to their clients right now. So one person who everybody wants to hear from here today is Tim Buckley. Buckley is the CEO of Vanguard. He doesn't talk much. He doesn't make a lot of public appearances. He's going to be on here, but he's going to be on with us exclusively at 4:40. We'll talk about why bonds are a competitive asset class. They're very big on bonds, the focus on long-term investing, and why you might have to expect some lower equity returns in 2023. They had that theme in 2022, and I think Buckley's going to repeat it with us again. We'll be right here on the air with Tim Buckley, 4:40 Eastern Time today. Carl, back to you.